Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are detailing everything that's going on in the macroeconomy to help you make better home buying decisions. This week's 30-year fix is not out yet. They are released on Thursdays, so I did last week's a little late. So we have not gotten the new 30-year fix, but again, last week's 30-year fix was at a 5.98. Now, rates have been coming down, but we are in some pretty shaky waters. A lot has been going on in the world geopolitically, and that impacts the macroeconomy and the financial markets, which are going to impact the mortgage interest rate. So we're going to get into all of that when we get into the charts. So let's get on into those charts. So as you can see, the 10-year yield is elevated, and that is due to the very volatile geopolitical tensions that have occurred over the weekend. The war with Iran, the closure of the Strait of Hormuz, which consequently caused a spike in oil prices, which is bad for inflation. So all this to add tons of volatility and uncertainty into the market, and the bond market is selling off, causing the 10-year yield to rise significantly. So, like I said, the 30-year fix hasn't come out yet for this week, but I am expecting that to definitely be higher than 5.98. All right, let's take a look at the economic calendar. So, last week we ended the week with PPI, and that was pretty hot reads. 0.8% expected, 0.3, and then non-core 0.5 expected, 0.3. So hot on both fronts. When we look at manufacturing PMI and manufacturing prices, prices are pretty dang elevated. So big expansion in prices paid, that is. So that's bad for the inflation narrative. Also, on the labor side of things, we did get the ADP non-farm employment change, increase of 63,000 jobs. So labor situation looks like it is getting better, while inflation does not look great. The ISM services PMI, an expansion in services, so that's good. The next thing we have to look out for is the labor side of things with average hourly earnings. Retail sales is always good to look at. Non-farm employment change, and the unemployment rate. The market is currently pricing in 2 rate cuts, so we will see if and how that changes whenever we do get labor data. So next week, let's see, anything important. Existing home sales will be good. There is a tentative weekly employment change from ADP. Wednesday, we get core CPI month over month, and CPI year over year. This will be a really important number to watch, so definitely going to pay attention Wednesday, March 11th. Building permits, housing starts, Thursday, March 12th. The 30-year bond auction at 1:01 p.m. on March 12th. And then core PCE, preliminary GDP. And then JOLTS Friday. So pretty big week next week. Next week is definitely going to be one to watch to see how the 10-year yield responds and how just the financial markets are impacted by all this data. Whether the Fed are going to be willing to cut rates any further, or if there's going to be, unfortunately, a rate hike or just a pause. It is like a 97% chance of a pause on the March 18th meeting. So that is also coming up this month. Like I said, the new 30-year fix is not out yet. So last week's 5.98, I'm definitely expecting this to come up. Be a little bit higher. And that's all we got for you this week. So any questions, comments, or concerns, reach out to us at www.mortgagesbyluna.com or give us a call at 877-TEAM-MBL. Have a great week. Bye.